Hey guys, welcome back to the channel. Welcome to episode 9 of QuickBooks Online Basics for Beginners. Today's an episode I think a lot of people have been waiting for. We're talking about undeposited funds. There's a lot to say about undeposited funds. I know I say this about a lot of my topics, but it's a super confusing concept, especially for new beginners in QuickBooks Online. But I think once you understand what it's actually doing, it becomes a lot easier. In the video today, we're going to break down what undeposited funds actually is, when you should use it and when you should skip it. And then some common mistakes people make. And also, we'll go into some do's and don'ts of using undeposited funds. So, before we jump into undeposited funds, I want to quickly tie this back to episode 8, which was about customer invoices, receiving payments, and sales receipts. Because the way that you receive a payment or record a payment in QuickBooks Online will determine whether you use undeposited funds or not. So let's just do a quick little recap, and I'm going to show you the QuickBooks Online bank transaction screen. There are basically 3 different primary ways that you can receive a customer payment in QuickBooks Online. The first method is receiving the payment directly from the bank deposit screen. So that's the screen we're on right now. This is where all the transactions flow through into QuickBooks Online within your linked account. Okay, so we're looking at the checking account. These are all the transactions that have synced through the checking account. So if you have a business where you're skipping invoices altogether, you're not sending sales receipts, all you're doing is recording the payment on the bank transaction screen. That's completely fine. So using this method, when the payment hits the bank account, let's just say this Books by Bessie transaction, it was a received amount of $55. We'll say this was a payment to the business for some kind of service we provided. If that's the case, we'd select the category as some kind of income category. We'll call it sales of product income, and we post the transaction. Now, using this method, it's important to make sure that if we're categorizing this and not matching it to anything, that this transaction has not been entered inside of QuickBooks Online manually. If that's the case, we can go ahead and post this. That's workflow 1. The second method of receiving customer payment is to create a sales receipt. To do that, we click on the plus sign or create, and under the customer column, sales receipt. So remember, sales receipts are created when there's no invoice that was sent, the work was done, or the sale was made, and the payment is made on the spot. So these two things are happening at basically the exact same time. So there's no accounts receivable, there's no separate receive payment step later. Okay, that's what this is. We're recording the sale and we are recording the payment at the same time. So within the sales receipt, we do have the option of depositing this to undeposited funds. Okay, so if we know that this payment, and let's just call it $100, if we know that this payment is going to be part of a larger batch deposit along with other customer payments, and when I say that, I mean on the actual bank statement, it comes through as not just the $100, but the $100 combined with multiple other customer payments, then it's important to make sure we use undeposited funds as our deposit to account. Now, on the flip side, if this $100 gets deposited as $100 right into the bank account, and this is the amount that comes through on the bank statement, that's when it's okay to choose the checking account as your deposit to account. Okay, our third method of payment is, you guessed it, sending invoices and receiving payments within QuickBooks. So if we're using that method, we're creating a customer invoice, and then when that customer pays the invoice, we are recording the payment in QuickBooks Online. Let's take Amy's Bird Sanctuary, for example. We'll say she sent a check for this invoice. So we go to receive payment. And when we're in the receive payment window, again, we have the option to deposit to either undeposited funds or the checking account. So undeposited funds, if this payment is going to be part of a larger deposit, or the checking account, if this check is going to be deposited to the bank by itself and the grand total of the bank deposit is $239. Okay, so I know I'm talking a lot about undeposited funds without really having told you what it is. So what is undeposited funds? This is basically a holding account for your customer payments until you've had a chance to take the payments to the bank. So think of it like a cash register, or just you yourself holding on to the checks and the cash until you've had a chance to take that money to the bank. So you've collected the money, you've received the money from your customers, but the money hasn't actually been deposited yet. And that spot right there is what undeposited funds is. Funds that you have received but have not deposited yet. Undeposited funds. So the job is just to temporarily hold the funds before taking them to the bank. And the main reason that this exists is because real life bank deposits usually consists of multiple customer payments together, right? You collect 5 or 6 checks from customers and you are holding on to those until maybe there's enough to go make a bank deposit. Maybe you make a bank deposit at the end of every day. You take all the checks that you collected from the day and you make one bank deposit, right? I know you don't go to the bank and deposit each check that you have individually as a separate bank deposit. Maybe if you're doing mobile deposit, but if you're doing a traditional bank deposit, you're definitely grouping those payments together, combine them together, fill out your bank deposit slip, and make one bank deposit. That's exactly what undeposited funds does. Okay, so next you're probably thinking, when do I use this? When do I not? So like I said already, you're going to use undeposited funds when you have multiple customer payments that are grouped into one deposit. Another example might be if you use a third-party payment processor or if you use QuickBooks Online Payments, any kind of a merchant service that you use to collect customer payments. Customers are paying ACH via PayPal, or they're paying with their credit card through Stripe or Square or QuickBooks Online Payments. So let's say you receive multiple card payments throughout the day via Square. Square is not going to just send each customer payment individually to your bank account. Instead, it's going to batch the payments all together, all the payments from that day, and then at the end of the day or the next day, it's going to send one deposit, including all of those customer payments, to the bank. So this is a perfect use case for undeposited funds. And what you're going to do here is receive all the customer payments in QuickBooks Online. So you'll go to the customer, receive the payment, and select undeposited funds as the deposit to account. Once you've received all the payments within QuickBooks Online, you're going to go to the plus button or the create button, click on bank deposit, and you're going to select all of the customer payments that were part of that batch deposit. Now, it's important to make sure that the batch deposit amount matches the amount that was actually deposited into your bank account. And you should be able to see that amount when you log into your online banking or when you look at your bank transaction screen, right? The amount received should show up here. And if you're not seeing it, go ahead and refresh your bank transaction screen to get the most recent transactions showing up. So another thing to pay attention to here when you're using a third-party merchant who's collecting payments for you and then giving you a payout or a batch of customer payments at the end of the day. A lot of times they're going to charge a fee, right? So payment processors, they might deduct your fees a little bit differently depending on who you're using. Sometimes they will give you the full amount of the customer payment and then later they'll take a completely separate transaction fee. They'll just withdraw it out of your bank account. But sometimes that fee will actually be deducted from the deposit. So if they deduct the fee after the fact and it's not part of your customer deposit, you don't need to worry about that step here. You're going to just categorize that fee when it comes through the bank feed. But if your merchant deducts the fee from your customer deposit, you're actually going to reflect that when you're making the bank deposit. So let's say our bank deposit consisted of these 5 customer payments, but the amount that was actually deposited into our bank account was not the 1068.15. It was the 1068.15 minus a credit card processing fee of 2.5%. So if that happens, that fee needs to be added in this section down here, this section called Add Funds to Deposit. So what we do in this situation is we would categorize the fee to whatever kind of fee account we have set up in our QuickBooks. So in this case, we're going to use the account called Merchant Credit Card Processing Fee. It might be called something a little differently in your account. You might have to create one, but you'll want to make sure that you do have some sort of fee account set up if you're dealing with merchant deposit fees. Now, we want to make sure that this deposit amount equals the amount that actually got deposited into our bank account. And for the sake of this video, this isn't a real transaction, but we're going to say that our transaction fee was $26.70. That's the amount they took, that the Stripe or Square, whoever we're using, they took that as their fee for processing our credit card payments. So we're going to enter this amount as a negative. They took $26.70. We're going to enter it as minus $26.70. And then when we hit tab, we can see this amount decreased by $26.70. So the total amount is now $1041.45. We want to make sure that matches the amount on our statement to get deposited. So we can save and close. Okay, so let's talk about when you might not need undeposited funds at all. So if you have one customer payment, and we've talked about this already, but if you have one customer payment, let's say a customer paid you $1,000, They wrote a check, handed it to you. That was the only check that you got the whole week. So you might A, mobile deposit that check. You might B, just take that check to the bank by itself and make a bank deposit. Now, if that's the case, when you are receiving the customer payment in QuickBooks, recording the customer payment in QuickBooks, since you deposited that check to the bank by itself with no other combined customer payment, it's just fine to select the checking account as the deposit to account for that bank deposit, because that $1,000 is the amount that's going to show up in your bank transaction screen here. So if one ACH payment or one check payment equals one bank deposit, you can usually record the payment directly to the checking or whatever account it was deposited to. Now, if you want to use the undeposited funds for everything while you're learning the workflow, that's completely okay too. Do whatever you need to make yourself feel comfortable going through this process. So, pro tip, one really easy way to think about this is use the bank statement as your reference point. If the bank statement combines the customer payments together, undeposited funds is usually involved. If the bank shows deposits individually, recording straight to the checking account or whatever account you're working with usually works just fine. Okay, so we've gone through 2/3 of the process. We've gone through receiving the customer payment, using undeposited funds as the deposit to account, if you have multiple payments that you're depositing with one bank deposit or that are getting deposited as a batch. But there's still one step we haven't touched on yet, and that is matching the deposit in the bank feed. So we are going to use this deposit of $868.15 as our example. We can see this deposit was made. It was received into the checking account for $868.15, but there's no match showing here. We're going to say for the sake of this video, we know that this dollar amount comes from multiple customer payments. And we know that right now they are sitting in undeposited funds waiting for us to do something with them. So what we're going to do is we're going to create our bank deposit. Once again, we're going to click all of the checks that make up this one bank deposit. And I know our total here is $1,068.15, but I also know that we took $200 of this deposit and we put it into the savings account. And that can be done down here at the bottom of the bank deposit screen. If you ever go make a bank deposit and you have a situation like that where you kind of split the deposit, maybe you put most of it into one account, but you reserve a small percentage of it for your savings account. You can select here that we have a cash back amount going to the savings account. You can put a memo in here if you want, and we're going to say the amount was $200. And what that is going to do is decrease this 1068 by $200. So now we're left with a balance of $868.15. This is the amount we're saying was deposited into our checking account. I'm also going to change the date because I know that this actually happened on April 26th. We also want to make sure our account is correct. So the account this deposit is going into is the checking account. And then we also have $200 going to the savings account. Save and close. And now when we go back to that bank transaction screen, we should see a match here, which we do, of $868.15 into our checking account. So this is where we hit match, not categorize, because what matching does is it connects the bank transaction to the deposit that we already recorded in QuickBooks Online, okay? It recognizes both sides of the transaction. If we were to now categorize this transaction instead of matching it, what would happen is we're going to duplicate our deposit, which is going to create duplicate income, which we definitely don't want. So anytime you can, when you're using undeposited funds or when you have recorded a customer payment in QuickBooks Online, you always want to make sure that you match it to the transaction that comes through the bank feed, okay? Which you will see on this screen. These are all the transactions that have synced through the bank feed. And when you actually record the payment in QuickBooks Online, that's when QBO will recognize a match. So pro tip, if QuickBooks is constantly failing to find your matches or match your deposits correctly, it usually means something is off. It could be the payment was deposited to the wrong account. So when you made the bank deposit, maybe this account was misselected. Deposits could have been grouped incorrectly, or in the bank transaction screen, the payment was categorized instead of matched. So if your matches aren't working, make sure you check those things first. All right, next, I want to go through some common mistakes when it comes to undeposited funds. I know I'm beating a dead horse here, but mistake number one is going to be categorizing instead of matching the bank deposit. So if the payment was already recorded in QuickBooks, you want to make sure you match that transaction in the bank transaction screen, not categorize it as income again. Okay, mistake number two is just completely ignoring the undeposited funds account. Sometimes payments get sent to undeposited funds, maybe mistakenly, maybe with good intention, but then they just sit there and they're left to die, or you're hoping they'll just go away. So this can make things very messy very fast if it's not checked. So another pro tip, make sure you check your undeposited funds account regularly. To do that, all we need to do is go to chart of accounts, find your undeposited funds account, and click on view register to open it up. And this is going to show you anything that is currently sitting in undeposited funds. So trust me when I say this is going to help prevent tons of problems later if you're checking this account periodically and making sure nothing got forgotten in there. Because if you're hoping the stuff in your undeposited funds will just go away, it won't. It needs to be addressed. If you are someone who has a bunch of stuff sitting in undeposited funds and you're scared to look at it, know that it's not going to go away on its own. It's got to be addressed and dealt with. And it's better to do it now than to keep waiting and putting it off. So last section here I have are some do's and don'ts of using undeposited funds. So let's start with the things we should make sure we're doing when it comes to undeposited funds. Again, if you guys are going to learn anything from this video, it's going to be use undeposited funds for grouped deposits. Number two, make sure your grouped deposits actually match the deposits on your bank statement. That is going to make your reconciliation process so much easier. Make sure that you're matching bank deposits from the bank feed whenever possible. Next, make a point to learn how your payment processor batches payouts and how they take their fee. This will help you determine where you're going to enter that fee, if it needs to be part of your bank deposit or if it needs to just be something that's categorized later from the bank transaction screen. Lastly, review your undeposited funds account regularly. This is going to help ensure that nothing gets stuck in there, nothing gets left in there and forgotten about, and that your books stay accurate and clean. And finally, let's end with the things that we don't want to do when using undeposited funds. So the first thing is we do not want to categorize deposits that already exist in QuickBooks. We want to match those. We do not want old payments left in the undeposited funds account. And lastly, we do not want to mix our workflows or our processes randomly. So if your workflow is creating invoices and receiving payments, do that consistently. If your workflow is categorizing payments directly from the bank feed, do that consistently too. And your workflow should match the natural flow of your business type. So, for example, if you run a retail business, you're usually not invoicing customers, right? If you're a retail or a restaurant or something like that, you're not sending invoices. You're probably just recording the payments as they come in your bank transaction screen. If you're someone who provides a service like a bookkeeper or a contractor, you're probably sending invoices and then receiving payments. There's unfortunately no one-size-fits-all workflow. It really depends on the nature of your business, but the key here is consistency. So get into a good flow that works for your business and make sure that is what you're using all the time. So that's it for undeposited funds. I really hope that helped you guys. And at the end of the day, QuickBooks is simply trying to mirror what happens in real life at your bank. So when deposits are grouped together in real life, undeposited funds is a tool that helps QuickBooks Online do that too. So it's not a scary tool. It's a really nice tool. It's a great tool. If it's used correctly, it can really help to keep your books accurate and make your reconciliations flow really smoothly. So if this video helped you, please make sure to give it a like and let me know in the comments what part of undeposited funds confused you most. And did I answer your questions? As always, thanks for watching, and we'll see you in the next video.